Let's talk about Mahanagar Gas then and understand what the triggers have been for their volume growth and what the outlook is when it comes to their margins. Ashu Shinghal is the managing director and now joins in on the show. Thank you so much, Ashu, for taking time out. To begin with, let's discuss the volume side growth. It's been a 3% sequential growth. Is this looking sustainable into the coming quarters?
Yeah, good morning, everybody. Yeah, it seems to be picking up. Last quarter or quarter on quarter, it is 3.5%. And if you compare to the last quarter of the last financial year, it is more than 7% growth. So going with the trend and initiatives which we have taken, the prices, and we expect that the volumes will grow slightly further or stabilize in future.
Okay, and what about your margins? Because they've been impacted on a sequential basis largely on the lower APM gas collection, the higher spot prices. Have margins recouped now with the spot gas prices falling?
Yeah, I think the margins are much comfortable. I mean, last year, financial year, it was 9.5 rupees EBITDA per SCM. Last quarter, we have clocked around 15.5, and now it is around 13.3 rupees per EBITDA per SCM. The point is that spot, we have now switched from spot gas to more term contracts. So that has given us more stability in the price and procurement cost.
Ashu, the other thing I wanted to understand was about the car conversion rate in third quarter. Tell us how that's been, and have we surpassed the previous quarter number, which was around 19,900? And if yes, what's led to the uptick, you think?
Yeah, I think we have bettered the last quarter's number. It is around 22,500 or around 23,000 new conversions have taken place in the last quarter. And till date, in this 9 months, we have around 57,000 have been converted, which was last financial year, it was around 65,000. So we expect that by the year end, we will touch around 80,000 conversions. So that's a good growth numbers. And we expect that next year also it will be continuing the same rhythm.
Right. And how's the overall CNG market looking like? Any early threats from EVs? Also, has there been an increase in MSRTC buses?
Yeah, first coming to MSRT buses, they are increasing the numbers quite substantially in last few months. Around 600 buses are plying on the road, 500 to 600. And they have a target to reach up to 1,000 buses in maybe another 5-6 months' time. So that is an upside on terms of MSRTC. Regarding CNG volumes, yeah, they are also picking up, and we have clocked a growth of around 7% year on year for 9 months. And we think that this will be continuing since the number of stations are increasing. The prices of CNG are also low as compared to the last year. So we expect that the volume of CNG will also be stabilized or further pick up in next few quarters.
Okay. It looks like a small trend right now, EV, but I'm again going with that as a concept, which is that increasingly EV will increase. So you are actually staring at a new source of energy which will grow. It may look small today, it may look okay tomorrow, but it could become very large in 5-10 years. How are you preparing for that?
See, we have to look at it in a more holistic manner. All fuels have a place in the transport segment, like coal is also there in terms of producing electricity, which is being used in running the EVs also as of now. But more and more greener electricity will come. But there are certain fuels which cannot be substituted, like diesel is one which cannot be substituted by EV in terms of heavy vehicle transportation. So as more and more highways are getting connected, more CNG and LNG applications will grow. So yes, you are right. Small segment, maybe two-wheelers and three-wheelers will be the segment which will be first impacted by the EV and more EV coming forward. But we feel that there will be place for a fuel like CNG and LNG, which is cleaner than petrol and diesel, to stay for a much longer period.
Understand your business. Can I say that it is a simple cost plus model? That's how things are stacked up for Mahanagar Gas?
If you say cost plus model, it is not entirely true because if we divide our business into 3 segments, one is that CNG is competing with petrol and diesel, and others are industrial commercial is competing with LDO, fuel oil, and other such fuels. And PNG is sometimes competing with LPG. So it's not exactly cost plus business model, but it is a strategy of pricing to the competitive, it being competitive as compared to the alternate fuel.
So in terms of ensuring that your future source of supply is maintained, how are you doing it?
If we talk about supply, there are 2 points. One is that APM gas is being given for PNG and CNG segment, and HPHT is also allocated for the PNG CNG priority segment, which is around $10 per MMBTU, and APM is around $6.5 per MMBTU. So 100% of PNG CNG quantity is met through these two allocations. The rest is industry and commercial, which is through the term contracts of LNG. So the supply is not an issue. The point is that at what price we purchase the gas. So as of now, LNG prices are also reasonably normal. They are not very high. So we have term contracts related to Henry Hub and other such indexes, which give us the supply security.
Okay, and even post your recent acquisition, I understand that the company will be left with a decent amount of cash on the books. Can you tell us whether or not there are any other acquisitions in the works, or what you plan to do in terms of the utilization of that?
Currently, we are exploring few options, but none of them is yet frozen. The first thing on our mind is to stabilize our first acquisition of Unison and Enviro, which is expected to be completed very soon. The shares will be transferred. The lock-in period of 5 years is already over, which regulator has also given their green signal. So that will be the first thing. We like to consolidate that company into our fold. The other thing which we have done is LNG joint venture we have opened up. So new stations will be rolled out. At the same time, we are exploring and scouting for some opportunities as and when they come out. But it takes time for any acquisition to take place. Even this Unison acquisition has taken us more than 1.5 years to fructify, and finally the company is in our fold. So we are looking for the opportunity. As and when they come, we will be announcing it.
Okay. One advantage you have is that you have a monopoly, almost like a monopoly in the areas you are present. Is that a risk? Right now it's a blessing, but it could also be a risk as the economies open up, as if one looks at how competition is intensifying from the private players.
When you say monopoly, it is not entirely true, because the license are bidded through by the regulator and they are taken by individual company. That is the first step. And as I told a bit earlier also, that all our sectors like industry and commerce is competing with fuels. Then CNG is competing with petrol and diesel, and PNG is competing, that is the domestic PNG is competing with LPG. So it is not entirely monopoly. And there is also a talk about exclusivity, that after a certain period, the regulator opens up for certain percentage of the infrastructure to be utilized by other companies. So that also can be done. The matter is current sub judice. So as and when it happens, a part of it can be given to the other players. So I don't think there's a monopoly as such in the companies in which CGD play. It is just a matter of the way government has thought the licensing should be done, or the sector should be promoted to develop the infrastructure.
Appreciate your time. Thanks so much for joining in and giving us a better viewpoint on Mahanagar Gas.